some other receipt or receivable in the cash and kind of agreement for not carrying on activity in relation to the business or profession non-employee understand the non-compete fee situation assuming the PVS 10 crores and the Mukta Srimas and non-compete fees in the hands of Gupta 10 crores and BGBP the income and taxable and non-capital we were 10 crores in intangible asset, depreciation 28% writer. Provided that the clause E shall not be applied to the sum received or transfer amount time and manufacture a right to carry business profit in interchange with the head of capital. Compensate the receipt for multilateral fraud of a Montreal portal substance and delete the ozone zone. Section 115 BBG discussed in the chapter 9. Not sharing and not knowing, sharing or know how copyright, trademark, license, franchisee, other business, commercial right, similar nature and business or technique likely to assess the manufacturing process of the goods and provide provision for us. Any sum received by the Cayman Insurance Policy Section 10D, Section 10, subsection 10D, including some allotment to the bonus way of policy. All you need to know is about the Cayman Insurance Policy. Cayman Insurance Policy is insurance that the employer takes to cover life of the imported employees and to protect the business case of the premature death of the keeper. So, a summary of taxability of sum received by the policy. Any sum received by the company taxable under BGBP. Any yeah, sum received by the company is taxable under some policies are a surrender value received by the employee or some received retirement taxable benefit rate of salary and a salary head. Some received by the chairperson or independent director or the employer where employer related does not exist taxable and income classes. Premium paid by the Cayman insurance policies allowed under Section 37. Some policy. Such policy taken by the firm is one of the partners allowed. Such policy taken by the firm, one part of the following partner is allowed. Yes, displayed black of the employer-employee relationship is allowed under Section 37. The fair market value of an inventory of the on the date which is covered into or treated and the capital asset are determined prescribed manner. Fair market value of the inventory as a date of this are converted into or treated as capital asset determined in the prescribed manner. Any sum, whether received or receivable, any kind or cash or kind, account by the capital asset other than the land and goodwill or financial instrument being demolished or destroyed or discarded under or transferred it is whole experience, therefore it is allowed under section 35D. Explanation when assessing as a place of speculative business, a business shall be deemed to be distinct and separate from the other business. Speculative transaction section 35, 30, 43, 5 relation to section 73, section with intra-rate section 73 means a transaction which contract for a purchase or sale of any commodity, including stock or shares, is settled otherwise than actual delivery. Following companies shall not be deemed to be carrying a speculative business. The company which gross income, total income consists of mainly interest income and income from house property and capital gain and income sources not considered income which whose business is trading in shares and business of granting loans is not considered as speculative income. Following shall not be deemed a speculative transaction. Hedging contract regarding to raw material or merchandise in respect of stocks and shares is not speculative contract, and forward contract is not speculative contract. Trading in diversification carried out by the President RSE. Trading derivatives carried out in the resident stock exchange is not a speculative income. Trading in a commodity derivatives carried out in the resident stock exchange is not a speculative income. For trading in agriculture commodity derived capital gain is not applicable. CIT and KG interest received from margin money deposited to the banks and amount obtained bank guarantee of contracted is taxable under head of business and um, Business income. BGP Section 145 Method of accounting. Income chargeable under BGBP and income from associates should be computed as per either cash or mercantile basis of accounting regularly employed by SSC. The capital gain is may notify the official gazette and income computation disclosure ICDS. The capital gain therefore notified in ICDS applicable to all SSC following mercantile system of accounting. Other than individual HUF is not required under the audit under 44 AB. When the AO is not satisfied about the correctness or completeness of the accounts or the method of completeness of ICDS, AO may make assessment of Section 144 misjudgment. Assume Manasseh following a mercantile system. However, the bill was supposed to be recorded in March, was missed and recorded paid in April. The bill will be downloaded with reduction in for branches 2024 years. Even the bill was omitted to be recorded in the book. Assessee can still claim reduction because the purchase was made in March and Kedarnath, the June manufacturer than assessee can adopt the cash basis of one just business accurate for another. Section 145 method of accounting studies and in the determination of BGBP inventory is valued at low at cost and net realizable value. Section 145 to purchase Section 145 to the purchase inventory shall include tax duties and cess fees paid to bring goods into place of the location condition data valuation. Inventory include unlisted securities secure value of actual cost in Section 145 to inventory being listed as security, the value is lower of cost and net residual value as per 145. Refer to ICDS towards the end of the chapter. Income section 145B taxability of certain income, nature of income, determining the income of the previous year individually. Nature of income, deemed income in the previous year in which nature of income received on any compensation or enhanced compensation. Deemed income is previous year in which received taxable under section income from other sources. Any claim of escalation of price in contract or exported etc. Reasonable certainty realized is achieved. Income under section 2 clause 25 clause 8 subsidy from central government received is not charged to tax in any previous year. Section 29 computation of EGPP income referred to Section 28 shall be computed as per the provision of Section 30 to 34. 30 to 34, the 43D. About the business income. Section 30 rent rates taxes repair insurance from building respect of rent rates tax repair and insurance income used for the purpose of business and profession following deduction shall be allowed where the premises are occupied by assessee as a tenant rent paid plus amount repair and plus the amount repair undertaken to be paid otherwise owner minus amount for the paid by the current year. Land revenue, local rates, and municipal rates subject to 43B, whichever is higher. Amount of insurance premium against the risk of damage or destruction of property, whichever explain the repair expenses mentioned clause shall not include any capital expenses. Any expenses, capital expenses can be. Concept and clarity check. No notional rent will be allowed in the case of the assessee is owner of the property. In the case of firm using premises owned by a partner, rent payable to partner will be allowed. Reduction to the extent of reasonable or non-excessible. Says rates tax for lived with a foreign government is not allowed. Premises used partly for business and partly for house property proportionately allowed. Amount paid by landlord to tenant for vacation of property is considered as cost of improvement for the building in the hands of landlord. Summary for repairs. Tenants and owners are about revenue repair, capital repair, for tenant revenue repair allowed as deduction in the case of agreement. Capital repair deemed building and added back to the block of depreciation. Owner revenue repair deduction and allowed capital receipt added to actual cost of building. Section 31 repairs and insurance of machinery, plant and furniture in respect of repair of insurance of machinery, plant and furniture under business and profit business profession. Following deduction shall be allowed. Current repair insurance premium against the risk of damage of statute. என்னாச்சுமா current repairs insurance premium against the risk of damage and destruction therefore um, such a reduction is allowed. And note the current repair shall not be included in any capital expenditure. Repair including renovation of asset, but not be replacement or restructuring, but not a replacement or reconstruction. Insurance premium any take to place a construction contribution to trade associated with the undertaken by indemnificating members against loss. Insurance machinery used partly for business and partly for reduction of a year may be determined. Rent on a plant machine is now covered 31 income most properties, but covered 37. As per section 32 depreciation, in respect of depreciation of building, plant and machinery, furniture, tangible assets. Know-how, parent, copyright, trademark, license, franchise, any other similar intangible must not be in transaction business profit. Owned wholly or partly by the assessee under the business and property or allowing other direction shall be allowed. In the case of assets or undertaken, engage in the generation, distribution of power presented and actual actual cost. Notes any such assessee has been option to claim depreciation under the straightened method of WTV. So return down depreciation value, weighted depreciation value. Such option is exercised before the due date return section 139. Now, once exercised, it can shall apply to all subsequent events. In the case of option of Shaitan method and discarded asset, that traditional depreciation in case of loss, reduction, balance charge tax. Terminal depreciation TD when the asset is sold, discarded as the same previous year such a put which is first put to use. The loss arising therein is not allowed under the TD, which is treated as capital asset. TD is allowed only in the actual return off of books of the balancing charge section 41(2). The amount of depreciation remains claimed and the taxable under the balance of section 41(2) under the business income. The remaining surplus is the taxable under the capital gain, where the asset is sold discharged in the previous year in which first was used. Any profit therefore the charged to tax and tax and BC but not be treated as capital gain. A limited is undertaking engaging generating business. Actual cost is 100 crores, depreciation was T 100, closing balance 90. Second year, taxability of the sale of the asset. Sale price is 60 crores, terminal value, terminal depreciation is 20 crores. Is to IT and balance. In the case of 90 crores, balance charges 10 crores. 120 crores, so 20 crores balancing charge, and 10 crores. So actual charge is 80 crores, 20 crores, but the depreciation is 20 crores add to be already. But in the case of 90 crores, 10 crores depreciation kalichi vittate balancing charge 10 crores no balancing charge, terminal depreciation, balancing charge, and in the case of 120 crores and 20 crores balancing charge, 20 crores application. Okay. In the case of block assets, a percentage of turn-down value. Depreciation in the case of depreciation in case of succession of form by the company, amalgamation or demerger, etc. In such cases, the depreciation is hence a result of the company shall not be excess the amount of calculated if amalgamation demerger is not taken up. It's also provided that depreciation shall be appropriately between two entities, a ratio of the number of days of the asset as used. Additional depreciation in the case of a new machinery. In the case of no machinery. Additional depreciation in the case of new machinery, a plant other than ships and aircraft which has been acquired and installed or put to use, assessing, engaged in business of manufacture, production of any article or thing, business of generation, transmission, distribution of power. Further 20% of actual cost shall be allowed as a depreciation, as a deduction. Now when the when understanding set up by the 1st April 2025, any backward area not by central government, state of Andhra Pradesh, Maharashtra, Telangana, West Bengal, acquires and install any machineries or plant as said undertaking under 1st April 2025 to 40% of additional depreciation shall be allowed. Reduction in respect of no reduction allowed in the UV row. UV row. The plant and machinery is following installation and use of the India or outside India, but any other person. Second hand, the plant and machinery is installed on office premises and etc. Comparison including guest house. Any office and machinery, office road vehicle, road transport vehicle. Any plant and machinery whole or actual cost which is allowed as a reduction, whereas the depreciation is otherwise it is in any previous year while computing VGBP income. Not relevant to additional depreciation in can shall be allowed as the computers used factors additional depreciation for lift and crans amount and will no additional depreciation. Road transport vehicles, it shall not be allowed case of assembled machines, no additional depreciation. Business of printing and printing publication, manufacture of article things which is only depreciation but not true for manufacturing. Section 115 BAB discussed later. It is available for plant and machineries, not for the building of yes or no. If no, it's also only available one time. It is not allowed in the case of assessee paying the Section 115 BAB and BS companies, 115 BAB individual. Not relevant for additional depreciation. It shall be allowed. It shall be allowed on computers used in factories and industry purposes. The forklift trucks and carrying some mounted on the wheels or not a transport vehicle. It shall not be available for the assembled machinery depreciation. It's not allowable. A business in the printing publishing is for manufacturing of articles or things. It is not a depreciable. It's not true for manufacturing. And it's on for BAC. Better discuss later. It is available for the pattern machineries, not for the building of fixed furniture fittings. Also, it's available for only one time. It's not available in the case of assessment paid, Section 115 BAE and Section 115 BAV for companies or Section 115 BAC for individual and GFN. Section 115 BAE, Section 115 BAD for corporate society. However, normal depreciation is not allowed. Terminal depreciation in case of power consumed over the class 1. In the case of building, machinery, plant and few for plants and furniture that is tangible asset, the respect of which depreciation is claimed and allowed under the class 1, which is solid, discard, demolited or destroyed in previous year other than the previous year in which brought forward to use. Amount by which the money payable in respect of the asset plus scrap value already fall short by return double value. Provided its deficiency is actually written off in the books of others. An unabsorbed depreciation UAD, unabsorbed depreciation, it shall be carried forward indefinitely and set off against the incomes under the head except against salary. Section 32. Orders to offset against the current year profit. Current year depreciation, brought forward loss, and unabsorbed depreciation in prior years. No, the unabsorbed depreciation can be set off even a business in which pertains no longer exists. The unabsorbed depreciation shall be carried forward even the return of income is filed after the due date of Section 139(1) and no return of income is filed. Section 80 and Section 139(3) applies only for the loss and not depreciation.
The partial depreciation in the case of assets acquired and put to use on the previous year is less than 180 days. Normal depreciation restricted 50% of the actual previous year. In the case of additional depreciation, 50% is allowed in the previous year and balance of 50% will be allowed in the immediately the previous year. Concept of clarity check. If the asset is put to use after 3rd October, 4th October leap year, 50% is allowed. If the asset is purchased on previous year 24 but put to use on 10th October, depreciation of previous year will be full depreciation. Oh. Ownership only wholly or partly is important depreciation. The car is not registered, but the ownership is intended here to beneficial owner, not the necessary of registration owner. The capex on leased buildings or deemed building owned by the assessee and added to block. Usage of asset. The asset must be put to use at any time during the previous year. During the depreciation is not been proportionate to period of use, ready to use, or not enough to claim depreciation. If the asset is not put to use, no depreciations or act to block of asset. Use including passive use, for example, standby equipment, fire equipment, and generators. Depreciation is allowed even if the asset is used by a person other than the, for example, leasee provide such a lease in OCOC. Lease in other accumulate other business. Okay. In the case where the taxable asset is partially used in the business and partially in the business purpose use, depreciation is allowed in the proportionate of AO or system section 38(2). Depreciation is compulsory and whether or not the assessee is relevant. But now one why assessee is not climbing in the first place. Participating interest PI by the oil exploring producing company rule 5 to increase the rate of depreciation at such international intentionally skipping. There is no depreciation on land. The terms of building will not include land. The assessee purchase a flat or for office building, the actual cost will be split between the building and the land under it, and the depreciation will be provided proportionate to the building. No depreciation allowed in goodwill in the case it is allowed earlier but now amended. No completion fees is considered as no complete fees is considered as intangible asset. No complete fees. And definition of plant, section 43(3). Plant includes ships, plant includes vehicles, books, scientific apparatus, surgical equipments, and including plants and equipment and building, and excludes tea brushes, leaves, livestock, building and furniture and fittings. The term building includes roads, bridges, wells, and tube wells. As per the ICDSC, tangible fixed asset that standby by serving equipment as per the capitalization added to the block of asset and depreciation 15%. Machinery spares shall be charged to the revenue as to when consumed. When the spare is used only when the spares are used only in the connected with the internal or intangible fixed asset and there is use expenditure irregularity that shall be capitalized. Machinery spares shall be chargeable to revenue and it is when consumed. When the spares are used only in connection with the items of intangible fixed asset and then expected to be irregular, then shall be capitalized. The emergency spare gets and same treatment as standby equipment. Treatment of leases. Irrespective of the treatment of assessment year, irrespective whether the operating financial lease IT Act, depreciation shall be claimed by the leaser. The leaser. Leaser can claim depreciation. Higher purchase, higher leasee. Higher purchase, the leasee can claim depreciation. The lease rental to be shown in the income of the hands of leaser and allow expenses for leasing. Financial charges inherent installation will be taxed and the higher when the income and allowed as an higher expenses. At the time of leasing, asset is transferred back to the leaser. At the end of the higher purchase, higher has a right to buy the asset on the nominal price. No, there is a lease is not an ordinary course of business. Such a lease rental shall be taxable under income from our sources under section 56 club 2 section 2 and a deduction account of the depreciation which is shall be allowed under IF from our sources. Revaluation irregularities, evaluation of asset and irregularities income tax at only actual cost is relevant. When the machine is discarded in the previous year or not sold, in this case the company still plans an evaluation thereon. The discarding of machine is not put into use in the year, it is not lead to any money payable and hence it cannot be removed from the block. Rates of depreciation as per the appendix on building 5%, resident 5%, central 10%, temporary structure 40%. Furniture fitting 10%, plant and machinery, general machinery including oil will 15%, mobiles, phones and EPEX something. That's 15%. Other office equipment 20%, cheap 20%, motor vehicles 15%, if acquire and put to use from September 19 to 20 30%. Market vehicles used for hire acquired put to use in 30th August 19 to 31st order, 35% 40% book, 40% books, 40% renewable energy devices and air pollution equipment, 40% computer including perpetual such as UPS and 20-40%. That's how you include computer software. Payment of computer software considers a royalty for virtue of extension for section 916. Herein fully allowed as reduction under section 40AI and 40AIA. The TDS under 194J, 194 to be reducted. Intangible assets 25%. And note, the oil well and plant and machinery are depreciable at 15%, but tube bills are including building and depreciation at 10%. Note, residential 25%, 10% commercial, other building, furniture, 15%, plant and equipment, oil well, mobile phone, EPABX. What is EPABX? Electronic peripherals and other office applications and motor vehicles, chips 20%, intangible assets 25%, non-compete fees 25%, and fancy fees, license fee 25%. Excluded. Computer actually 40%, book 40%, temporary structure 40%, renewable energy devices 40%, air pollution control equipment 40%. Concept clarity. It is a lease uses a motor vehicles for running them and hire. Lease can be claimed at the depreciation of 30%. The Tata Motors lease some of the motor vehicle to Akbar Travels, which is use such motor car running from them for hire. It will claim depreciation or not? Yes, leaser can claim depreciation 30%. Important case of laws relating to depreciation. ICDS with the CIT. Can depreciation leased vehicles denied to a leaser as a vehicle is registered in the name of the lessee or leaser and not an actual user of vehicles? No, leaser is still eligible to claim depreciation. That is a twin requirement to claim depreciation. Ownership and usage in both are requirement and fulfilled. Mindshore Minerals Limited. Twin recommend claim depreciation, ownership and usage. These both are required to be fulfilled. Registration is a name under the Registration Act is not determined ownership, then can be seen beneficial owner. CAT, BSEC, Yamaha Powers. Computer accessories and peripherals such as printers, scanners, servers, etc. The integral part of computer cannot be used without the computer, hence 40% depreciation. Depreciation of UPS 40%. EPAX, mobile phones are not computers, hence 15%. Computer hence it is. Section 143 return down value. Return down value is an actual cost of depreciation allowed actually allowed. No, it's a UAD UAD now. UAD unobserved depreciation. Unobserved section depreciation under section 32(2) shall be deemed to be depreciation actually allowed when the income of a assessee is derived partially from agriculture and partially from business. Computing WDV, total depreciation shall be computed the entire income it is derived from the business, such as the depreciation shall be deemed to be depreciation actually allowed. The income from manufacture of tea minus 40% income of liable to tax. WDV cannot be negative. Return down value can be negative. The amendment of Finance Act 2021, the block of asset on 31st April 2030 will include goodwill and depreciation amount of goodwill asset. Goodwill was this only asset in the block and shall be deducted on the block of previous year 2021. Succession of the death. The WDV and the hands of successor is equal to WDV hands of succeeding to. In the case of transfer by the block of asset to unlisted public company to private company and to LLP under section 77 8B 47 the actual cost in hand LIB is equal to WDV action hand of transfer or to calculation of WTB format. Return down value of block in immediately preceding year minus depreciation actually on the previous year. WTB block beginning of the previous on the financial year plus add the actual cost of acquired during the year and plus add the actual acquired but not put into use not eligible for depreciation. Less money payable on asset that is sold and discarded or amount of scrap value. Less actual cost of asset transfer to slum sale. WTV end of the year depreciation above 100% prescribed rate. Money payable means as a sale price of the asset as value including insurance, salvage, compensation, actual expense. No expense of transfer will be adjusted against this. Listen, WDV of block asset was 10 lakh, asset sold is 2 lakh, expenses of sale is 50,000. How much? So block asset minus net sold 2 lakhs, expense on sale is can be mentioned. So 2 lakh, the amount of adjusted for sales 2 lakhs. Expense of 50,000 shall be allowed as a revenue expenditure in section for 37G under section 37. Section 43(1) actual cost. Section 43(1) actual cost. Actual cost is equal to actual cost of asset minus portion of the cost made to by another person or authority. While computing the actual cost, exclude the payment in aggregate made to a person on the day exceeding 10,000 otherwise than account payee, check drawn by plan, account payee draft, bank draft, electronic clearing system, prescribed mode of debit, credit, IMPS, RTGS, NEFT, and UPI and PGP 6269 SS. Explanation section 43(1) particulars and cost and illustration. Asset used in the business after it exceeds and to be used for scientific research. Actual cost is nil since 100% depreciation can be claimed into section 35(1) and 4. Inventory converted into capital asset section 28 6A and used for business under business and business BB used to under BB business and profession. Fair market value of the asset and the date of conversion. Asset acquired by way of gift or inheritance. Actual cost of previous owner minus depreciable allowance as if the asset was only asset in a relevant block. Asset used by any other person for the business and profession. As AO satisfy that asset is acquired to reduce tax liability by claiming enhanced depreciation. Amount determined by the AO and the previous provision of the joint jurisdiction by the joint control. No impact of sale considered answered in the hands of seller or computing tax. Reacquire of tax under the BP business profession lower by WDV of the day rate of rate as a date transfer assuming it is the use of asset in the block that is actual price by asset acquisition sale price and sale plan asset is acquired by the assessee Mr. E from the other person B who is used by the business of profession and claim depreciation therefore it is a lease back to the same person. The WDV is asset of the hand of transfer and a B and asset as a day of transfer assuming such asset is used in asset in the block. Explanation for A overrides the explanation B. Building is not building not other assets converted to business by personal uses. Actual cost of hands of asset minus depreciation allowing including the rate of acquisition. It is used for the business and profession rate of on the date as the rate of conversion date. Unlike explanation. Asset transfer holding 100% of Indian subsidiary with the WDV of the hands of holding company assets only asset of the block. Asset transfer by subsidiary to 100% Indian company. WDV in the hands of subsidiary company as if it is an only asset in the block. Asset transfer by the amalgamation company to Indian amalgamation company. WDV in the hands of amalgamation company. Transfer by the demerger company to Indian company consulting company. WDV in the hands of demerger company. For illustration, therefore double check the end of the table. Interest paid with respect of acquisition of asset till the date of purchase. Interest include actual cost. Now the interest is paid after the date of use allowed under deduction under section 36(1)(3). ICDSC intangible fixed asset expense on the startup and commission of project including tax run expenses capitalized expense after the plant is put to use commercial production revenue expenditure. Note sale price of products generated from a tax run shall reduce the cost of asset. Sale price of the product generated on the test run shall be reduced cost of the asset before commencing the commercial production. Assessee borrowed 100 crores since the fund is idle. It may fix deposit 60 crores on the previous year and earned interest of 5 crores. However, the interest income is a loan 12 crores. Assessee added the 7 crores in actual cost and AO denied the treatment. Okay. The treatment, right treatment 7 crores shall be capitalized in the cost and 5 crores should be in process. Actual cost shall be reduced by exceeding a duty of additional duty or GST with respect to input tax credit shall be claimed send by credit or GST input tax credit. Subsidy on the grander remuneration of the capital gain short-term and short-term central government state government shall not form part of actual cost. However, where any grant or subsidy cannot be directly related to the asset acquired, in such a subsidy or grant shall be rotated proportionately to the total assets. No, the LPG subsidy or any other welfare subsidy received by the individual in the personal capacity is not connected to the business and profit shall not be taxable. However, the waiver of loan considered under section income under section 2 class 77 is in the case that loan related to the particular asset, then such waiver shall be reduced on the actual cost of asset. Example, loan against capital goods to say authority it has been waived. Below the developers purchase a building of first April 2015 and first ever 10 lakhs and then even the non-resident including foreign company acquire an asset outside India and then the asset is brought into India and then used in the business and profession. Cost of asset is equal to actual cost minus the depreciation calculated and the rate in force that would be allowed on the date that force in what would be allowable than that asset being used in India and said purpose since the date of its acquisition and depreciation rates the respective years in which taken into consideration. In the case of corporation of RSE approved by the registered security exchange approved by the SEBI, cost of actual cost is equal to deemed amount of actual cost that has been so incorporated. Actual cost in the case of capital asset is on which deduction is allowed 37 AD is equal to nil. Provided that such a capital asset is transferred from the specific business to a normal business associate, the actual cost can be actual cost minus notional depreciation. When other developers purchase a building on 1st April on 10th lakhs and has held in stock for trade of 15th, the company decided to use the building for the business purpose and hence converted into capital asset. The fair market value of 12th October 2023 and this and 15 lakhs discussed our trade pollution. Business income into BGBP is equal to net fair market value that is 15 lakhs. Assume the 10 lakhs is already adjusted into BGBP calculation. Actual cost is added out of the block of 15 lakhs. Depreciation in the financial year 2024 5% on 15 lakhs because used on less than 180 days. Grill purchased the building for 10 lakhs and 23 and gifted to Mrs. Sarah when the fair market is 15 lakhs. Sarah used the asset on the business. Discuss the tax implications. Sarah includes the asset on the block of actually 50 that is cost 20 lakhs eligible for depreciation. The gift in the hands of Mrs. Sarah's amount taxable that is 15 lakhs 5 lakhs accepted. 5 lakhs. So Sarah and fair market value is 15 lakhs. Gift is favored. Purchase a building for 10 lakhs and gifted 15 lakhs taxable. When Mr. A sold 10 lakhs, to 10 lakhs, 10 lakhs. So the 10 lakhs to Mr. B for 1 crore. Assessment officer considers the actual cost of handle of Mr. B to be 15 lakhs on fair market value, but that would not impact the sale price of Mr. A. He would still have to pay taxes on the cost of sold 1 crore. Mr. Happy purchased an asset of 1st April 10 lakhs and added to the block of depreciation 10%. Then it sold it to Mr. B for 12 lakhs. Next 3 years, he has acquired the same on 1st April 2004. Calculated the actual cost of asset in the hands of SB. Actual cost of asset in the acquisition or acquisition. So 10 lakhs minus depreciation for 3 years is 7 lakh 90,000. Then 15 lakhs, 7 lakh 90,000 actual cost of re-acquisition. So Mr. Ivan purchased a building for purchase person use on 1st April 23 for 10 lakhs. On the 1st April 24, he decided to start use of factory building a business operation instead of personal. Then the amount of is added to block in 424. So the actual cost 10 lakhs and depreciation 10% or 2 years is the right out force and the rate of the conversion it will be taken consideration on the older dates. Unlike explanation 11, if a transfer company holding subsidiary so the amalgamation does not use or such asset for its business, then the actual cost of transfer shall be actual cost hand of transfer without any notional depreciation. In the case of transfer of capital asset from the part of block assets, in the case of particular the transfer from one or more capital asset block exists that is all the assets sold. Fair market value is equal to a less aggregate of open WDV actual cost of assets acquired during the previous year. Expenditure on transfer should be reduced. Short term is equal to short term capital gain, short term capital loss. General speaking, in the section 50, it triggers that in two cases. Firstly, a few assets are sold out of the block and the sale consideration A exists onto WDV. Secondly, when the whole block is sold and consideration may not be exist, WDV short-term gain or loss. Note that the WDV of the block of asset is computed only on 31st March and previous year or not daily basis. In this case, stamp duty value is greater than the sale consideration. Take the WSDV for the full value consideration. Foreign exchange fluctuation section 43, 43A for ICDS 6.
Section 43 law tax treatment changes in rate of foreign currency. The asset is acquired from the foreign country, business and profit, and the consequence of changes in the forex rate. There's an increase or decrease in liability in the time of making payment towards the whole or part of cost of asset and payment of money borrowed from any person in the foreign currency for acquiring such asset along with this interest. Such increase and decrease of liability shall be taken into account at the time of making payment irrespective of the accounting method. It shall be added or deducted. The actual cost is called under section 43(1) and cost of capex in section 35(16) scientific research and 36(16) for family planning, cost of acquisition and capitalization. Explanation: the liability meant wholly or partially by authority shall not be taken into consideration for the section. When assessee has taken forward contract specific rate adjustment 43 with respect to the specified rates contract in the year making payment. Profit and loss of cancellation forward contract of business and business income and loss, no adjustment against WDV but rollover charges, extension of the contract adjustment to WDV in the auto blocks. Section 43 is applicable only when the assets are acquired by the foreign currency and using the foreign currency loan and supply credit, and not applicable to the asset acquired in the India using foreign currency. Tax treatment of forex fluctuation in interest in the foreign capital loan period after the date of date put to use, revenue expenditure prior to the date put to use, adjustment in WTV in the year payment at the rate at which it use. Illustration: under the forex under the interest rate asset outside India purchase on the was April 12% on 81 million, so $100,000 100,000 the asset put to use 30 September June, the exchange rate is 82, loan repaid is 85, so 80 to 2 rupees increase. Net treatment added to WTV asset 80%, for excavation costs is 80 to 85. Loan repaid is 5 lakhs, interest to be capitalized is 3k, what is 3k into 82 and 85, 82, it is 2 lakh 40,000, so 87 lakh 46,000. And by expenditure on P&L, foreign flux capitalization is 3,000 into 80 minus 76, 1 lakh 7 lakh 65,000. 85 into 82, and the interest cost for after the cost put into use 9,000 into 85 7 lakh 75,000. Okay, 9,000 7 lakh. Section 44, taxation on the foreign fluctuation interest cost after the asset put to use. Section 43A, taxation of foreign fluctuation. Section 43A, gains and loss due to the changes in the foreign taxes. Treatment of income and losses as per ICDS. Above reference, gain or loss will be accounted for the mandatory items and non-mandatory items. Transaction of financial statements of foreign operations and foreign exchange contracts of foreign exchange transaction reserve. ICDS 6, effect of change in foreign rates. Monetary items of cash receivable payable at the last day of the previous year converted into the reporting currency rupees by applying a closing rate. Exchange difference and settlement of conversion of the last day of previous year recognized as income as expenditure in the previous year. Non-monetary items convert the reporting currency applying exchange rate at the rate of transaction except inventory. Exchange difference and conversion no cannot be recognized as the income expenses. The inventory carried out the net residual value and determine the foreign currency shall be reported using exchange rate existing when the value is determined. Income which is partly exempt and income partly taxable, like summary. Rule 7A, sale of some rubber products, latex and cream, some amount to rubber plant growth in Sierra India. Agriculture income 68%, business 35%. Sale of coffee growth and curing of sellers in India 75%, agriculture and 25%. Sale of coffee grown, cured, roasted and rounded by sellers 65%, 40%. Sale of tea grown and manufactured by seller in India 60% and 40%. Concept of clarity check. If the assessee plugs the tea leaves and sell it in the market, it is an agriculture income or a business income. It is a purely agriculture income. Section A, Rule 8 not apply fully exempted. Income derived from sampling and seedling growth and nursery should be deemed to be agriculture income whether or not basic operations are carried out or not. Section 33A, tea, coffee, rubber development account. Eligible assessee, all the assessee engage in the business and growing and manufacturing tea and coffee rubber in India. Three conditions: assessee must deposit about NABARD coffee NABARD account purpose at approved scheme and deposit account on the deposit scheme in the previous year's approved account. Such amount should be deposited yearly 6 months on the end of the previous due date on the date of filing of the assessment year. Account of the assessee is subject to tax audit 44 AB and the audit report signed and verified by the auditor is already auditor under the any other law separate audit board and audit under the section for not applicable. Section lower. The amount deposited and account 40% of PGBP income before reduction 38 of composite income. And deduction is allowed in the before setting of brought forward loss and under section 72, but after the current year depreciation. Withdrawal account for the account. Account may be withdrawn only by the purpose specified in the scheme of tea, coffee, rubber board. For circumstances, closing balance is taxable, disclosure form taxable, death of assessment non taxable, partition of entities not taxable, liquidation of company not taxable, taxable under the BGBP in the head of the withdrawal of the company had not been closed. Deemed PGBP. Withdrawal of such account shall be taxable in the following cases. Amount utilized for the purchase of following assets taxable in the previous year. Plant and machinery in the office, residential guest house taxable. Office applications not being computed taxable. Plant and machinery whole cost which is allowed as a deduction, and a new whole cost which is allowed as a deduction. A new plant and machinery installed in the industry undertaking a business and construction or manufacture of the specified section 1 schedule, be it above, etc. Such withdrawal amount remains unutilized in the previous year in which withdrawn amount cannot be utilized can be deemed to be BGBP of the income. Utilization should be same previous in the semi withdrawn, where the assets acquired in the scheme is sold and transferred before expire of 8 years and the end of previous year which is acquired. The cost of asset is relatable to the deduction 34AB and shall be deemed BGBP not on the sale value of the cost. Exemption when the asset is sold to government, local authority, government, so a sale of without respect to succession firm and the company. The sale value exceeds cost such cases is equal to capital asset. Important where an asset of such account is utilized as per the scheme, the purpose of the revenue expenditure such as expenditure shall not be allowed as reduction for the purpose of plant or machinery. Depreciation shall not be allowed therein. Step to be solving exam questions in section 33AB. Net profit on the books adjustment under 49 to 43D except 35 net profit of the income tax. Okay. Reduction in the 30 reduction in subsection 33AB subject to 40% net profit in income tax. Add unutilized amount on previous year. Add miscellaneous amount. Add cost of depreciation of asset because before 8 years total income 40% above business income. Less brought forward losses is total income. Section 33AB in the site restoration fund expenses of expense in prospective extraction of petroleum natural gases eligible as engaging in the business of prospecting and extracting or production of petroleum or natural gas both in India or agreement with capital gain condition. Such amount can be deposited 6 months or before the previous year. The SBA scheme approved by the Ministry of Petroleum, Natural Gas or site restoration account. Site account in which assessee is subject to taxable tax audit 44AB and tax audit signed by the verified auditor. It is already audited under the law and separate audit under the section NA. Reduction lower of the amount of depreciation 20% of BGBP income. No reduction is allowed in the for offsetting bought forward losses and 72 and under the current depreciation. Withdrawal of amount from the account. The amount may be withdrawn only for the business purposes other than the declaration of dividend or distribution of profit purpose of which is purpose is ineligible eligible asset. No such as expense shall not be allowed as a deduction under the BGBP. Ineligible asset. The withdrawal from such amount which shall be taxable in the cases where such amount is utilized for the purpose which is the following plan the previous year plant and machinery in the office and residential guest house. Office application not being computer. Plant and machinery whole cost which is allowed as a deduction. New plant and machinery installed industrial undertaking of business and construction or the manufacture of things specified in 11th October beer and tobacco. Withdrawal deposit or closure of the account shall be deemed to be BGBP income and reduction from the payable to capital gains production share. Any amount realized during the previous year not utilized within the previous year is not utilized as a scheme charge under BGBP. Where any new acquired assets are transferred sold within 8 years from the end of the previous such acquired deduction shall be allowed under the treater's income and expenditure when an asset is sold to government, local authority and so that sale is succession of the firm by company. Important deduction under section 33AB shall not be allowed. The computation of income of a partner of the member of AOP and BOI. Deduction is claimed under the section by the firm of AOP and BOI. Any amount credited in the special account and a site restoration amount by way of credit and income is deemed to be deposit and the point to be 33AB. Section 35 expenditure in scientific research. expenditure in scientific research, research association, a university, college, and other institution. In the case of scientific research, following reductions are allowed. Any revenue expenditure, 100% reduction, revenue expenditure made within 3 years of the commencement of business, salary excluding perquisites, the purchase of material allowed previous year commencement, the amount paid to research and development research association, university, college, and institution. Scientific research are 100% allowable prior to 31st March, 150% allowed. Prior to the ROU approved and specified central government official gazette, an amount paid to company to be used for scientific research, which are the following, which provide that such companies registered in India, main object to scientific R&D, such company approved by the prescribed authority, other prescribed conditions. Any amount by the research authority and corporation of India, operation of colleges or association, for a social science or statistical research, 100% allowed, provided that RO is approved specified in central government official gazette. Reduction under class 2, class 2A, class 3 shall be denied merely on the grounds that subsequent of such payment approved grant of ROE may be withdrawn. Any capital expenditure 100% allowed. Process of approving RAOCO, the research authority company making application to prescribe form to government for central government grant of approval or contribution therefore. And the central government may grant approval, call for all the documents, information necessary to satisfy about the genuineness of the activities and make inquiries as necessary. With respect to 1st April 21, approved by the company's ROE shall be deemed to be withdrawn unless ROE make intimation to prescribe forms and income tax authority within 3 months, that is 30th June. Such approval shall be remain valid for 5 consecutive years from 31. Reduction respect of sum paid by RACO or company which is allowed only if the RAN company prepares and delivers prescribed statement to income tax authority within prescribed time, furnishes a donor certificate specifying amount of donation prescribed manner. Capital expenditure section 35(1) 100% to be reduction in the previous year which capital expenditure note. No reduction for the acquisition of land. Capex within 3 years on the commencement of the business, 100% reduction. No depreciation can be allowed in the case of no depreciation. Depreciation can be allowed only once 100% reduction is allowed. Where the asset is used in the business or profession after it ceases, it is used for scientific research and nil depreciation as the actual cost itself. Its equivalent. There is no computation to put to use of supplying reduction 35(1)(4). Any sum paid to national laboratory, university, IIT specific person approved by the prescribed authority for a specific direction. Such sum shall be used for approving scientific research program. 100% reduction shall be allowed. No such reduction in the act under the allowed interpretation. No such reduction shall be denied merely on the grounds that approval of the national laboratory specific person withdrawn. Approved program is withdrawn. Are the companies engaged in the business of biotechnology or business of manufacturing of articles or things other than the 11th schedule items incurred any expenditure on scientific research other than the lantern building or in-house and R&D facility, 100% of the expenditure should be allowed. Treatment of the capital asset in case of amalgamation. In the case of amalgamation company sells asset used for scientific research to amalgamation company, then such shall apply to amalgamation companies as they have been applied to amalgamation company if assets were not to be transferred. And if assets was not so transferred. Unabsorbed scientific research capital expenditure. Similar treatment of the unabsorbed depreciation infinite period set off except salary. Priority of adjustment. The current year depreciation, scientific research caps, and family planning capex and business profit losses for adjustment. Unabsorbed depreciation, scientific research caps and family planning caps. Section 41(3). When the scientific research asset is sold without being used for the purpose, then the following shall be taxable on the head of PGBP. Sale proceed reduction under 35(1)(4) for supplemental. Note some say such amount shall be taxable even that the business does not exist. But sale proceed exceeds the original cost of asset taxes excess in the capital asset. The cost of asset purchased by the scientific research is 21 lakh. Reduction claimed to 35(1)(4) previous year is 10 lakh. Case where the asset case in scientific research is on property. The actual cost added to the block is nil. And now the case of the sale of asset 43B in section 50 shall apply. Asset sold directly without being used in business. Sale price 8 lakhs taxable under the BGB 8 lakhs. Taxable on capital gain nil. Sale price 12 lakhs taxable under the capital gain 10 lakhs. The taxable gain is 2 lakhs. PG based. Where the land purchase for 2 years prior to the commencement of business is allowed as a reduction. No reduction of land is not allowed as disallowance under section 435 by the SSC pay tax and special rates. Section and allowance disallowance. 115 BAA, 115 BAB, 35 12, 35 12A, 35 13, 35 2A, 35 2B. Section 115 BAC, section 115 BAD, section 115 BAE. So this and other allowance section 35 12, 35 12A, 35 13, 35 2A, but 35 2B is not allowed. Expenditure of 35 ABB expenditure in the license to operate telecommunication license service applicable to capital expenditure incurred for acquiring right to operating telecommunication or telecom services either payment or after the commencement of business payment for actual being made for obtaining license reduction is what relevant previously up to appropriate fractions amount of reduction relevance also scenario amount reduction by the fee license fees paid prior to the commencement of business. License fee is paid prior to the commencement of the COB. The amount of license fee divided by number of previous year from the COB till the expiry of the license. Number of previous years, so till the expiry of the amount of is paid on or after the commencement of business. Amount of license fee, the number of previous year of the payment till the expiry of the license. Commencement payment till the expiry of license for the previous year. No, the deduction of such action, the payment should be actually being made. Mere recording of liability shall not make any expenses eligible for reduction. Reductions under the sections allow no depreciation may be charged. Reduction shall be allowed in the year of payment made commencement of business whichever is later. Transfer of telecom licenses. Whole part of licenses transfer. Whole part of license transfer sale price is greater than expenditure unallowed, then the PGB income sale price minus expenditure unallowed subject to maximum reduction of 35 ABB. Whole license transfer, whole license is transfer, whole sale price is less than expenditure unallowed, expenditure deduction is called expenditure unallowed minus sale price, and the sale price is transfer. Part of license last but sale price is less than expenditure allowed. So the extraction of unallowed expenditure is equal to expenses allowed minus sale price, number of unexpired period of starting from the previous year transfer. Capital gain might be attracted to the sale of that license. Treatment in case of amalgamation and demerger. Section 35 AB shall not apply to amalgamation of company or demerged company. The same shall apply to the hands of amalgamation company, result of company respectively. Illustration reduction 35 AB. And 1st April 22, the license fees paid for 10 years, that is 80 crores. Commencement of business 0. Not chartered license transfer not. Calculate the reduction of 35 AB. So 10 years and amalgamation. So reduction on 35 AB is on financial year 2021 previous year 2010 and the commencement of 0 and the license transfer. So license transfer for 2024 around 8 crores of 8 years is there now. Say 8 crores 8 years 10 years and then it is going to be 18 crores. In the case of transferring the license fee expenses unallowed on the 1st April 24 3 crores. The whole license fee transfer, party transfer, case 1, 2, 3, sale price 40 crores, 60, whole transfer 70%, reduction of 20 crores allowed, 44 AP, and PGB 70 crores, 60 crores, PGB income 10 crores, 100 crores, capital gain 20 crores, PGB 20 crores, and 60 crores, and so 60 crores on reduction 40 crores, 70 crores on 10 crores profit to 10 crores PGB income. So 100 crores on 20 crores PGB income, 20 crores capital gains. Part transfer na 40 transfer na 60 or 40 to 20 by 6. So 40 60 unexpired position. So 60 to be divided for unexpired period. 100 transfer na no reversion. PGB income 20 and 20 capital gain 20. Section 35 ABA capital expense and the right to use spectrum for the telecommunication service. Some provision of Section 35 ABB shall apply to the spectrum fees paid by the telecommunication companies. For Section 35 AD investment linked incentive for specific businesses. Reduction 100% of capital expenditure DTI fees also reduction of 35 AB and specified businesses. In the caps which is aggregate a payment of a single day is greater than 10,000, otherwise account pay check or draft or the electronic account pay check or draft electronic system. And condition for reduction. The reduction shall be allowed in the previous year in which operations is commenced if the expenses is incurred previous year to commencement operations and amount is capitalized in the books of accounts date of commencement. As saying in the option for reduction 34 AD. The expense capitalized in books of accounts and election. Assessee opts for the reduction that if the assessee incurred capital of the business after commencement, such expense shall be not allowed 100% previous in the executive. Ineligibility following or the specified business cannot be claimed reduction. Set up and splitting up and reconstruction of the business already existence. Setting up transfer of such a specified business are used for plant and machinery. The expenditure in the case of plant and machinery is eligible for reduction. The plant and machinery is used outside India by the person and other than the associate shall not be regarded as use of plant and machinery if the plant and machinery was not at any time prior to installation used in India. Plant and machinery imported from the country outside India and the priority of installation, no depreciation is allowed under the plant and machinery hands of any by any person. When plant and machinery is used by or any other purpose or now transferred to a specific business association, the total value of plant and machinery is 20% total value of plant and machinery can be ineligible. Ineligibility. Lock-in period. Some asset are used only in specific business for 8 years, the previous which can be acquired. If the asset is used for the purpose other than the specific business, others are during the 8 periods otherwise mentioned in the Section 28 Clause 7, that is demolition, etc. They are deemed income is equal to deduction of 35 AD minus notional depreciation, that is 32. Important note: the additional depreciation shall be allowed in the party as applicable. Deemed incomes provided shall not apply in the case of seeking industrial companies. Specific business setting up then operating cold chain facility, warehouse facility, storage of agriculture produce and store sugar, inland container depot and container freight station, semiconductor, feed fabrication manufacturing unit, laying and operating cross country natural gas and crude or petroleum oil pipeline network and distribution including storage facilities. Specific businesses laying and operation of Scully pipeline transportation of iron ore is specific business. Building and operating anywhere in India greater than 2-star hotel is specific business. Business and operation anywhere in India hospital 100 beds is specific business. Developing and building housing project under the slum development schemes or affordable housing schemes central government specific business. Producing and production of fertilizer in India specific business. Beekeeping and production of honey and bees specific business. Developing and maintaining and operating of developing, maintaining, operating new infrastructure facility, specific business. Concept clarity: assessing building 2-star hotel which compute is continuing to own hotels. Assessing transfer the operation to other person with consideration specific business. Yes, special mentionly laws only for hotels. Edible oil is not an agriculture product.
Set of carry forward. Loss of loss specified under section 35 AD set of losses against gain and specific businesses. Loss can be carried forward indefinitely at a limit of 8 years not applicable. Include important note: normal business loss can be set off on specific business or available. Loss of one specific business can be set off with the profit against another specific business. Section where the assessee opt for reduction 35 AD and no other deductions are allowed under section 10 AA and is and part C of chapter 6. The assessee also reduction 35 AD, no reductions are allowed under section 10 AA and part C of chapter 6. Unlike depreciation, section 34 AD is optional. Instead of this, assessee wants to opt for concessional contracts 115 BA, BAB is allowed. CIT Kribas Hotel Private Limited. Can assessee set up a hotel in section 35 AD for relevant previous in operating in the commencement but application for 3-year 3-star category although made startup when approved only next year due to inspection requirement. Assessee cannot be penalized for delay on the part of concerned authority. 35 AD is applicable commencement of operation not on a data certificate. The provision is encouraged hotels have been interpreted liberally. Hence the deduction allowed in the year of commencement of operation. Deduction of 34 AD shall be allowed where the assessee pays tax and special rates on 45 115 BAE and 115 BAP and 115 BAC etc. Section 435 ACA is a payment in associated with in installment carrying and rural development RD program. 100% reduction shall be allowed in the payment of the sum. The recurrent deposit set up notified by central government, national urban poverty eradication fund set up by central government. Note that the reduction is not to be denied if subsequent approved by specific person as withdrawal. Reduction in respect of 35 CCC such amount shall not be allowed under section other provision. Section 35 CCG's expenditure on agriculture extension project. Expenditure on agriculture extension project notified on the board 100% reduction allowed. Expenditure on land and building not allowed. Reduction of 35 CCC shall be available subject product. Separate books are worked on and the projects maintained and audited. The further CIT director IT such audited books note that projects are carried out by the current year certificate of Ministry of Agriculture GOA landing genuineness of this project. Section 35 CCD expenditure on skill development project only for companies. The expenditure on skill development project notified by the board 100% reductions allowed. PM Kaushalya Vikas Yojana PM Youth Training Program expenditure on land and building not allowed. Direction of 35 CCD shall be available subject to separate books of accounts of project are maintained and audited. Furnish CIT or director IT such auditor accounts and amounts claimed under the section skill development project with respect to existing employees commence with 6 months after recruitment not eligible. Existing employee commence 6 months after recruitment not eligible. Summary. Section 100% reduction following remark. Section 35 CCE Rural Development Fund 100% reduction. National Urban Poverty Education 100% reduction. Remark such funds must be established by central government. 35 CCC Agriculture Extension Products 100% reduction exempted from land and building. 35 CCD skill development expenses except once existing employees 6 months after recruitment. So only for companies except land and building. Section 135 being amortization amortization of preliminary expenses. Eligible as a Indian company resident person other than Indian company. Time period before commencement incorporation company commencement of business. After commencement with respect to setting up a new unit extension of undertaking. 1/5 every year for 5 previous year during the beginning of the previous year the business of commencement of extension completed. Preliminary expenses are load exhausting coverage. Expenses with respect to feasibility report, project report, market survey, other necessary survey, engineering services, provision to XSSC to furnish a statement of above expenditures. Income taxes authorized to prescribe branch 23. Legal charges of drafting agreement with respect to times of business. In case of company, legal charges of drafting MOA, OE, printing MOA, OE, registration fees. In the case of public issue, shares and debentures, underwriting commissions, brokerage, drafting charges, piping, printing, advertising, etc. The fees paid for enactment of both and the capital gains covered and there are other prescribed expenses. Maximum reduction company 5% cost of project or capital raised by employed whichever is higher other than 5% cost of 5% cost of project employed which is higher other than 5% cost of project number. Cost of project fixed assets were the land and building plant and machinery furniture etc. Capital exploit issued such capital expenditure plus debenture long term capital in capital employed 5%. Capital project cost of project and capital employed as the last day of previous year in which a business commences extension complete. Capital employed shall not include share premium amount. Now Burgess Prime Paint Limited audit of accounts to claim with reduction on accounts of previous year in which expenses incurred. Auditor 44 AB and signed and verified report issue. Amalgamation demerger. The amalgamation company is a resultant company which is allowed to amortize the remaining amount of permanent expenses over the remaining year. A note pre-incorporation expense around 35D, but the same income earned by the companies prior to its incorporation taxable in the hands of the company. Post-incorporation, no. Supreme held that its company did not even exist at the time of income. If the company exists public offers and using such a sum to repay loans and significant finance existing working capital such as issues, expenses shall not be covered under 35D and shall be disallowed. However, the company makes a expense on bonus issue. It is a revenue expenditure, not a capital expenditure. Hence, reduction 37. The fees paid in enhancement of EAC is a capital expenditure and it has no. Section 35 TD amortization of expenses amalgamation demerger expenditure exclusive amalgamation or demerger undertaking by the Indian company. Transaction 1/5 of the successive 5 previous year beginning with the 5 previous year took place. Example fee stage lawyer drafting scheme amalgamation hour 500th of each year. Advisor blind data amalgamation company incurred expenses instead of amalgamation company. Section 35 DTA expense of voluntary retirement scheme years. Expense of payment of voluntary retirement years 1/5 every 5 years. Reduction in case of linked payment reduction shall be allowed in the previous year in which the payment is made. Amalgamation, demerger, reorganization, etc. In this case, reduction shall be given to the new company of balance period, including the year of reorganization. 35 reduction expenditure proposed to certain number. Eligible associate or resident associate engage in the business of prospecting and extracting or production of iron minerals, zinc, gold, and limestone. Fraction of 1/10 of the calling expenditure for year relevant previous year. Subject to maximum each amount is sufficient to make business income from the mining of the previous year. That is, there can be no business loss arising from the section 30 reduction. Annual operation reduction but carry forward and plan for the use. Qualifying expenditure during the year of commencement fraction of 4 years immediately prior to the exclusive operating in relation to prospecting, minerals and developing of etc. No reduction in expenditure acquiring of site and deposit. No reduction in respect of expense acquiring of site deposit of proposal finance. Corporation building, plant and machinery and furniture and which is operation certified. Audit. Assessee claims which protections in preparing accounts to get auditor 34 AB and subject to report within prescribed time. Amalgamation demerger provision applies to amalgamation and co-resultant. So its amalgamation demerger shall not take place. Exception to land and within no depreciation land as 3516 capex on land scientific information 35 2 AB biotechnology other than land and technology and 35 CCC land and borrowing disallowed 35 CD land and borrowing disallowed. Summary of these expenses allowed and certain expenses. Section provision year 35 AB license fee paid by the lifetime life of license 35 AB plus spectrum fees paid by the amortization of payment expenditure 5 years. Expenses of amalgamation demerger 5 years. Expenses of VRS actually paid 5 years. Actual expenditure incurred in minerals 10 years. Discount in the SEB life of SEB expenditure in the family planning 5 years. Insurance company other reduction section 36 premium paid by the insurance of stocks and stock under the business permit allowed. Insurance premium paid by the Federal Milk Operated Society for insurance of the life of cattle owned by the member is allowed. Health insurance 36(1)(1)(b) premium paid rather than cash by employer or health insurance employee as the section framed by General Insurance Corporation ARDA approved insurance. Bonus and commission 36(1)(2) any sum paid a bonus or commission to the employees allowed. There is no limit of amount of bonus. There is no limit of amount of bonus. Such a bonus is not paid in view of dividend or profit and sharing. Such amount is allowed and is subject to 3544 BB. Such customary bonus is not covered in section 36 as a concern of bonus payable on the bonus side and hence as 44 AB shall be attached. Interest on borrowed capital 36 months. Interest paid on capital borrowing is business not allowed. Interest on capital borrowed on asset acquired for the date of borrowing to the date of put to use. Production result of the capitalization cost of asset. Interest cost incurred after the asset is put to use allowed. Concept clarity check. Interest on loan advances assistance concern from the commercial expectancy. Allowance depression of building minus C. Interest on loan taken for payment of income tax, advance tax, and disallowed as the income tax personalized liability. Where a company issued debentures on the option that subscribers can take in payment of interest upfront in the first year itself, as the interest claim shall be fully allowed as a reduction first year itself and not spread over the tenure of the debenture. Tabaria Tours Limited 0 coupons bond 36(1)(3)(a) a discount on the bond the deduction of quota rate based on the life of bonds. Such bond is issued by the infra capital fund and infra debt fund scheduled bank and public bank for doing pro rata considering for more than 15 days or 1 month. For pro rata less than 15 days 0 taxability in hands of such bond in the cover of the capital gain 0 coupon bond. Section 36 1 14 to 15. Section 36(1) employee contribution to allowed. Recognized provident fund approved security fund subject to 3043 allowed. Pension scheme 35 ATCD Alta Pension Yojana 10% basic plus DA forming part of salary allowed. 36(1)(5) approved gratuity fund for exclusive benefit for employees with irrevocable trust section approved subject to 43B allowed for excess contribution if any shall be disallowed in the 40. Employees contribution 36(1)(6)(a) after some received by the employee for the payment of welfare funds on receipt of taxable under the head 2 class 24 2 on payment before due date deduction 36 1 year on due date where the due not are implied on the rate of 139 where the referred to as due date is a respective act 15th of next month in the PF on 43B and A welfare as well welfare fund is equal to RPF, SAF, ESI funds, and other welfare funds, and animals used in business 3616 animals used in business other than the livestock plus dead or becomes permanent use reduction is equal to cost of buying means amount realized on sale. That is something. No depreciation of animals because the plant excludes livestock. Bad debts in 3617 and read 36 allowed in reduction if the return of irrevocable books of hands and as a debit charge as debit has been included in the computed income and current previous and prior year. Such a debit should be money lent and other course of business of money lending and business provided that debt is not recognized and the books much debt is including computing income provision such a debt represent money lent in which is other course of business provided that where the debt is not recognized in the books but recognized in computation of income as by ICDS that is percentage of method the project with a rather comparison with them. The debts became irrevocable in such deemed and the bad debts is a return of the books and MB claim reduction. Provision the provision of bad debts and debt shall not be allowed reduction. Proceeded Vera Bra Levoton Supreme Court the last successor of the business can claim the bad debt reduction even though the relevant debt has taken into account and completion of income of procedure with respect to the books of successor. Bad debt recovered taxable and taxable bad debt recovered taxable and 41 for GP. If the business closed in previous year, also taxable in the business and business income. If the firm has claimed and allowed bad debts and then the firm is dissolved and then taken over by the partner, we subsequently P recover the bad debt it is taxable and answer P. In the case of firm do not receive it and so not taxable on another firm and in the case of partner it is capital recipient it's not taxable. So it's not taxable at all. Advance paid to supplier for purpose of raw material supplier became bankrupt and could not supply raw material and did not refund that money. It's allowed in the election. No, because the much amount never be considered as income. Income that is in the second condition was that is a however deduction that is the claim reduction is not to prove the debt claim reduction need not to prove that debt has become irrevocable.